Hey guys, welcome back to another Saturday video sponsored by you. That's right. All these videos are sponsored by you. You guys watch the ads, you guys leave comments, you thumbs up, like, share, subscribe, all that. Use the affiliate links, all that. So you guys are the sponsors of today's video, and I truly appreciate it. So, funny thing about YouTube, it seems like as creators, the more time we spend coming up with topics or things to talk about to produce, the worse the video actually performs. I don't know what that is. It's like it's a catch-22, right? This particular video is probably the most time that I've ever spent putting together data. So if you would like, share, subscribe, leave me that thumbs up, do all that good stuff. I appreciate it, because down in the pinned comment for all you new here are ways to affiliate, use affiliate links, and you can hit that share button, definitely hit that like button. So today what we're talking about, as you can tell by the title, income, growth, or both, right? People are investing in QYLD for the income alone, because they like to have that money coming in, right? Some people reinvest their QYLD to build that income up over time. Some people use QYLD to use that monthly dividend and buy other stocks with it. So what we're going to do is we're going to go through all of those scenarios, okay? And we're going to see how those worked out for QYLD. And I'm using QYLD mainly because it has the longest history as far as a covered call ETF high yielder, and it is the most popular for sure. So let's get into it. Buckle in. This might be a long one. I don't know. We'll see. I know it took me a long time to put this together. So what we're going to start out with is, you can see this chart, okay? Now what this chart is the history of all the dividends going back to January 22nd, 2014 from QYLD. Every single month is right here. Now what I did was purchased what $100,000 would buy you in 2013, because actually QYLD started in December 12th or something like that of 2013, but they didn't do their first payout until February 6, 2014. So December 2013, you put in $100,000 in QYLD. That was the opening price, and we'll see how much shares that got you, right? That got you 3,992 shares. Now, on February 6th, they paid out a 25.74 cent dividend per share, which paid you $1,027.54, which was reinvested at $24.80. That bought you 41.43 additional shares. Now, these numbers are going to be, kind of estimates, because all brokers don't reinvest at the same price. They don't get paid out at the same price, etc., etc. So it's a ballpark. It's going to be, pretty close, right? So we just go on through the whole history of QYLD. Here we go. In March of 2014, they paid out 19 cents, and it bought 30 additional shares. April 10th, they paid out another 19 cents, but now you have 4,000 shares, so it bought another 31 shares, and on it goes. And you'll see, back in the day, QYLD's payment was very variable. So you went from 25 cents to 19, up to 26, down to 14 cents. Had a few 15-cent months. So very variable payments in QYLD in the beginning. But you can see as the months go on, your shares increase, your total shares increase because you're just reinvesting the money. So here we are, we're in 2017 now, and May of 2018, you've added almost 2,000 shares to your account because you started with 39.92. So here we go, 2020. You're up to 7,000 shares, and your income is getting to be consistently well over $1,000 a month now, and you're buying, between 50 and 75 shares a month. And here we are into 2021, and you're buying 81, 82 shares. And then at the end of, I went up to July 27th. Your last payment was $1,888.60. That bought you an additional 83 shares. So now your monthly income is running, $1,800 a month or so. And you've gone from 3,992 shares to 8,553 shares. And this number right here represents all the shares that were reinvested. So you doubled your shares by the income that QYLD threw off. So you added 4,561 shares for free, through the dividend. So what did that give you? That gave you over the 7.5 years roughly. It gave you $104,678.58 in income for an average monthly of $1,150.31. So at the end of the day, your starting capital, you started with $100,000. You reinvested $104,678.58. So your ending capital, your total net worth of the investment is now $192,614.11. And that is because, wait, did I do that right? Yes, I did that right. Your starting capital is $100,000, reinvested capital is $104,000, and your ending shares 8,553. So let's do the math here real quick. I know I can just do that on the Google Sheets and make sure that I didn't screw up here. 2252. Yep. So $192,614.11. So not bad, right? You almost doubled your money. You doubled your share count, and you're going to get, roughly $1,900 a month going on out. Okay. So now what if you just spent the money, right? You took QYLD and you spent the money. So this is the same deal, right? You bought 3,992 shares in 2013 and just collected the monthly payment every month and spent it, right? And you spent it on expenses. You spent it on paying bills, whatever. So what did that end up looking like? So I entered all the payments there. You ended shares of 3,992. You got a total income, because you didn't reinvest any of the dividends, total income of $70,542.32. So basically 70% of your investment in the beginning has come back to you in dividends, and you've spent it. So you got an average of $775.19 a month. Problem now here is that your starting capital is now only worth $89,900.20, which is $22.52 a share at the time. So you've lost 10%, but you've gained, you netted $60,000 in income over 7 years. So what is that? 8-9 grand, something like that. So, again, not horrible, but of course you'd like to see your capital, especially if you're just pulling money out of your income fund, to at least stay flat, right? But not all in all horrible. Now, the next one is interesting because QYLD, a lot of people buy it, right, to take the monthly income from QYLD and buy something else so that it feels, it's like growing, or it's free money, right? Or it's a free position because you're just using it to feed another investment. And that's what we're going to look at next. QYLD reinvested into QQQ. So we take those same monthly dividends that QYLD is throwing off. And what I did was I went through and found closing, or I forget, opening or closing. I think I did opening prices on the dates that QYLD paid out for the QQQ ETF, right? And what we end up with is, you'll see, that first payment in February of 2014, you got $1,027.54 and bought you 11.96 shares of QQQ. Yes, fractional shares weren't available back then, but let's just pretend that they were. You could have, I don't know if you could have bought a mutual fund maybe that was in the NASDAQ and it wouldn't have mattered, but let's just pretend QQQ had fractional shares back in 2014. So again, this goes on and on. The QYLD would go to 2015, and the QYLD is starting to get a little less income than originally thought, but the QQQ is going up in price. So you're actually, you originally bought 12 shares off of that, but now that QQQ has gone up in price and your income from QYLD has gone down, you're only buying about 6 shares, right? So we'll go over to 2016. We'll just pick one. And here we go. Your QYLD income, $800. But again, I think QQQ has been going up still, and you bought 7.82 shares. We'll go to 2017 here, and look, it gets to where when QYLD is paying less, but QQQ is growing, you're only getting 3.91 shares. But again, these are, quote unquote free shares, right? And it's growing. So let's go to 2019. QYLD starts paying out a little bit better, but QQQ is continually growing in price. So here we go. In July of 2019, you got $8.59. You only bought 4.5 shares. We'll go to March 2020, and QYLD paid out a decent amount, but now QYLD is up in the 200 range. So you're only buying 3 shares, 3.25 shares. And now we get into this run that we've had in QYLD, in 2021. And yeah, the income has increased a little bit here for QYLD, but the share price on QQQ has increased dramatically. So now you're only buying, 2 shares here, 2 shares there. But all in all, you ended up, after whatever we said, 7 years, with 485.92 shares of QQQ. Not bad, right? Not bad. So your total income, again, $70,542.32 that went to buy QQQ. So your starting capital was 0, and your ending capital is $178,926.38. So that's off of that $70,000 in income, grew to $178,000 in invested in QQQ. So you now have the value of QYLD as well, which we know from over here. Your ending capital was $89,900. So we add the ending capital of QQQ, and the ending value of QYLD. So grand total, $268,826.58. hey, that's not bad. From $100,000 to 268,000 in 7.5 years. I don't know the percentage numbers. I'm just looking at total, and not too shabby. You have 180 grand in QQQ for free, and you have this QYLD that is paying you out, $700 to $900 a month in dividend income. Not too shabby at all. But what if you took that $100,000 in 2013 and bought QQQ and just walked away, right? Just walked away. Don't even look at it. What would that have been like? Because all this other ones, you were reinvesting money into other things, and you were withdrawing money to spend it and all that stuff. It just depends on where you're at, right? The QQQ, it's a little bit more volatile, right? You're gonna have to probably stomach some downturns, but if you can do that, this is what QQQ did. So we had the starting capital of $100,000 back. It was December 12, 2013. QQQ was $85.21. It bought us 1,173.57 shares. That today, $364.43 as of July 27th. Capital growth of $427,684.54 for your ending capital of $527,684.54. There was some dividends received with QQQ, but honestly, it's not even worth even calculating. Just know that it's just a little bit more than $527,000, right? So there you have it, right? 527,000. What a run QQQ has had. Now the question is, this is all left side of the screen, left side of the charts, right? This is all already happened. What's going to happen now? Do you? I guess the question you need to ask yourself, because like take this for instance, QYLD reinvested into QQQ, or just buying QQQ. Is the QQQ is tech, which is QQQ is not all tech, but it's mainly heavy. It's heavy tech. Is that going to be the driver of the next 7 to 10 years? Right? We already know what happened in the past 7 to 10 years. So what's going to happen in the next 7 to 10 years? If it were my money betting, I think I would imagine I couldn't imagine. In other words, I could not imagine that tech does not still lead the way. In my lifetime, right? Probably in my kids' lifetime. I don't see that changing. I could be wrong. I don't know. But this was just a great exercise to look through and see actual numbers of what these different strategies that you can use QYLD with could do. If you were a income investor, right? This is what you expect. After 7 years, you've built up a position that pays you, $1,800 a month, right? That's not quite, for me, that's not quite enough to live on, but after 7 years, maybe another, I should have done it, but maybe a few more years, you'll get up to maybe $2,500 a month. I don't know. But as you can see, you're buying more and more shares as this goes on. And, if QYLD just continues paying, this could be a very substantial income stream for somebody, right? That's one way to look at it. The other way to look at it, is if you just used QYLD and just spent it all, it's not the greatest, right? That's why I always say, If you're going to be in QYLD and you're going to be in retirement with it, you need to reinvest a small portion. I don't know, 20% maybe. I'm just coming off the top of my head with that. Because you want that income stream to grow, because right here, it really, if you just took the income only, it really didn't grow. In some instances, it shrank because it started at 1,000, had a couple of $1,000 months there. And, even back in 2015, 2016, you were getting 850, 900, 800, 600, 700, and you're still around that range after 7 years. And that's not what you want with an income investment. You want your income to grow. So, reinvesting a portion of that dividend so that you can see your income grow over time like you did here. There was some variables back in QYLD's early stages because what people don't know is QYLD changed the way they handled their distributions. So they made it to where recently it's been a lot more steady, right? Because they typically shoot for 1% of net asset value paid out as a distribution. And, if they continue that, then, the more shares you buy, your income should just continue to grow. But, it's a slow process. $100,000 reinvested over 7 years gets you $1,800 a month. Not too shabby. So, the QYLD reinvested in QQQ, that's kind of like a hybrid. That didn't turn out too bad. 268,000 total, right? So I don't know, but I just wanted to put that out there. This took me a long time to put together, so if you could share this with your friends, share this on your social media, share this with anybody that's invested in QYLD or QQQ, and at least they can see what these different strategies with QYLD has produced. What it's going to produce in the future, nobody can tell. But if past performance is any indication, I would imagine that these same results would be very, very similar if we look at this 7 years from now. So that's all I got for you guys. Remember, like, share, hit that thumbs up. I would appreciate it. Check the pinned comment for the affiliate links and all that. So hope you guys have a great weekend. Like, share, subscribe. Thank you for being here, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.